Awesome. Ken, thanks for joining me.
My pleasure.
And to our customers who are going to be trickling in, thank you for joining us. We're here to talk about term reduction campaigns we're currently running with our some of our great customers, and also dispelling some myths and talking about the opportunity that exists for direct consumer mortgage lenders to be running campaigns specifically targeting borrowers that could benefit from a term reduction. So, without further ado, let's just kick off with some introductions. I'm Richard Reeser, your Chief Marketing Officer at Monster Lead Group, and I've got Ken, our founder, here. Got some very deep experience in mortgage. And Ken, you want to say anything before we kick it off?
No, not really. I mean, let's go jump into what these people came for.
Cool. So let's just start off. What is term reduction, and why don't lenders promote this messaging in marketing campaigns?
Yeah, so term reduction is another way to save money on your mortgage by reducing the amount of time you pay on that mortgage.
Hmm.
I think it's an undervalued uh, mechanism. Right? It's a solution to, all mortgages are just a solution to a problem, want, or need. And I think why most lenders don't necessarily lean into this or market it or promote it is because in general, people think that in order to reduce your term, you have to increase your monthly mortgage payment.
Hmm.
And so, I think that that along with identifying data that could benefit from that term reduction and not necessarily increase their mortgage very much is not an easy thing to figure out. So those are the two reasons I think that people kind of tend to stay away from it. It tends to be a kind of a forgotten tool in the tool belt.
You think the average LO is able to communicate the value effectively? I mean, you think this is something that requires some training?
Well, the average yellow is difficult to say. I'd say that the the less time someone's been in the space in the mortgage space, I think the more difficult it will be for them to communicate uh, this value proposition because there's a full understanding of it. A lot of people you need to understand that some of the benefit of accelerating your term on your mortgage has to do with how much money goes to principal on each and every month. Um, so you're actually paying into your equity faster by having a lower term, in addition to just paying off your mortgage faster. So you're actually building equity more rapidly. And I don't think it's thought about in those terms.
Well, so when we were talking about doing this, you were talking about how a borrower who responds to this type of campaign is very different from different, borrowers that are looking for a cash out, let's say, or some or payment reduction. Why, tell me a little bit about the borrower who is responding to this type of campaign.
Well, I'll kind of walk it upstream a little bit. Anyone who's done rate and term deals, right, or rate deals, like lowering your monthly payment through lowering your interest rate,
Yeah.
has come up against a consumer who says to them, $100 isn't enough, $150 or $200 a month, that's just not enough for me to want to do this, right? And so um, what that person is saying is that that's not the value prop that I care about. So if you don't care about saving $200 a month and I can save you $200 a month, what would it look like if I could keep your payment exactly the same and cut the number of years off of your mortgage commensurate with that same payment in the current interest rate environment? So yeah, I might not be interested in saving $200 a month, but because I don't value that $200 a month more than I value either how much time I've already paid down my mortgage, or I just don't see that as valuable, I may very well see the value in cutting 3 years off the term of my mortgage or 4 years off the term of my mortgage, and keeping that payment the same. So I just think it's something that is been vastly undervalued as a mechanism to present to consumers. Um, And I'd say that's probably a newer phenomenon because in the past, one of the things I think that changed, Richard, and why a lot of lenders haven't kind of get back to another question is like why lenders haven't leaned into this more, why it's vastly under marketed to, why it's vastly undersold, is that there was a change. And I'm getting old, so I can't remember how many years ago, but it used to be when I got in the mortgage industry 30 plus years ago, you got a 15 or a 30-year mortgage. And then eventually there was a 20 and a 25-year mortgage, right? And a 10-year mortgage. So, but maybe in the last 5 years or so, you started to see odd term mortgages come out. I mean, like you can set your amortization where you want it, 28 years, 26 years, 23 years, right? And now you have a lot more optionality when it comes to these things, where in the past, yeah, maybe if I took you to 20 years from 27 years, your payment goes up too much and you can't bear that and it doesn't work, right? But now with all of the different being able to do odd terms, you can pretty much dial someone in. And if you're able to save them money on a monthly basis on their on a rate reduction, then you certainly should be able to cut their term. Now, I can't tell you how much you can cut their term because it depends on that rate delta and how much savings there are. But there's a lot of opportunity out there. And what we're seeing is an enormous amount of that opportunity actually being utilized, especially in the conventional space.
From what we're seeing when we look at a term reduction phone call, like a campaign that's running for a term reduction and the borrower calls in, those calls sound way like the borrower, like their trust level is so much higher. Like the barriers to trust have been dropped because of the marketing copy that's being used, right? It's talking about something fundamentally different as in terms of like selling a mortgage as a both, and it's more about meeting someone's goals, right? Like paying off their home faster. And so what we're seeing, at least from what our teams are telling us, is that we're seeing um, these all of these phone calls are just so much warmer, and the borrowers are so much more engaged. And there's really promising results that we're seeing in terms of conversion to loans. Why do you think that is? I mean, do you think that's because
I think the messaging is speaking directly to their problem, want, or need. What most people get is if you think about it over the last, you know, 3.5 years, 3 years, right? Uh, Most of these borrowers have just gotten a cash out message, cash out, cash out. You want to do cash out, and or more recently with rate dips and things like that. Hey, we can lower your mortgage payment by lowering your interest rate. And what that does is it leaves a whole bunch of people out there that didn't respond to that stuff, who've been sitting on the sidelines going, well, that doesn't interest me. That's not the problem I want to solve, right? And so by addressing the problem that those people want to solve or hitting a pain point, like, hey, look, I would like to pay my mortgage. Who doesn't want to not have a mortgage payment, right? Like everybody. And so, and those people that value that, they tend to be a different type of consumer, which, in speaking to that type of consumer, we're noticing when they do call in, they're extremely, extremely engaged because it's something that um, is something that they've been thinking about and wanting that solution. And frankly, they just haven't been hasn't been put in front of them.
I mean, for the loan officer's perspective, that's got to be a welcome conversation where it's not just, hey, what's your rate? What's your rate? What's your rate? And talking more about a goal for the borrower. Um, so speaking of rates, like the market, we've all seen, in as the Fed's dropping interest rates, right? How does this affect term reductions, like the market right now as it stands?
Well, the more rates drop, the larger the delta between what the rate that a consumer has and the current offer rate, the greater amount of term reduction can be done, right? If I can drop you, for instance, like one of the things that we noticed is that term reduction was greatly underrepresented in 2021. So when interest rates were 2.25, people were dropping from fives and fours, they were dropping their interest rate, you know, 2.5 points. Um, should have seen more term reductions. The thing is, when you have that great amount of delta, you could drop the term and still save people money. And so the more that becomes yeah, you might not be interested, Richard, in saving the $200 a month that I had to offer you, right? And
Yeah.
maybe I can come back to you and say, well, now that rates have changed, I can offer you $400 a month savings, and maybe that would get you off off the couch to do something, right? But potentially what would be better for you is if I said to you, well, how would you like to cut 3 or 4 years or 5 years off of your mortgage and save $150 a month? To that consumer, that would mean a whole lot more than saving the $400 a month. And so it's just about understanding that there are people that this really aligns with that have a longer term goal with their home. And then people that, there are people out there that frankly are, let's be honest, are struggling to make ends meet, right? You've had in certain places, you've had 400% increase in taxes and insurance. You've had inflationary pressures in places. You've had those things, and those people probably need, the cash flow more than they need a term reduction. They need a short-term fix to the problem they have today versus, a a longer term solution, which is term reduction, you know. Um, and what they say is those who can delay gratification tend to make out the best, and that's kind of the way it is with term reduction. If you can delay that gratification, take that gratification over time with more of your monthly payment going towards principal, right? Therefore, you're building up your equity and you're getting growth at the same time of that equity. Um, you're going to be in a better situation. But it's very, it still comes down to what is right for that particular consumer. And I just think that a lot of times the consumer that's really interested in term reduction doesn't have that opportunity served up to them quite enough.
So I have a lot of calls I do with prospects and customers, and they're very focused on ROI for their investment, right? And I think a lot of them have a fairly good sense of what the ROI will be for a cash out type campaign and that kind of thing. What would you say to customers who are, you've heard this phrase a lot. I'll do what's in the money, right? What would you say to customers right now who are thinking, okay, maybe I'll try a term reduction, but you know what I mean? I really want to put my money on things that I'm confident I'm going to get good ROI on.
I mean, the ROIs we've seen, come back on these campaigns that are being run in term reduction are pretty staggering. They're so good I don't even want to mention them because I don't want to set bad expectations. Um, but what I will say is that uh, they produce one of the better cost per acquisitions. Um, the conversations are better, and long term, even if you're not able to do that deal with that person today, you should have a deep enough conversation to understand where you need to be with them to be able to do a deal if and when the rate presents itself. And we all believe that rates will come down in some aspect over the next 12 to 18 months. So, these are not just borrowers today, but they're borrowers for the future. Um, and so, I'd say that, looking at just traditional cash out or traditional like rate reduction, or what I call payment reduction, um, misses a big segment of the population.
Yeah.
We've seen in the data is the number of transactions that are happening, especially in the conventional space, I'll say, um, shows us that more of those people, or at least an equal amount of the people that are refinancing today, are using some sort of either full-on term reduction, right? Or what we call other, which is like doesn't necessarily reduce the term, but isn't stretching them back out.
Mm.
So that seems to be uh, a big hot button for at least on the conventional side of the data. Um, is something that you need to keep in mind when you're talking to these borrowers because you can see it over and over and over again. I mean, the number of deals that are either 30 to 25, 30 to 20, 30 to 15 is one thing, but the number of 30-year terms to other term, which means some sort of odd year term, is very, very significant. It's more than half of the transactions.
Uh, wow. Well, that is significant. So without giving away our like recipe to Coca-Cola or Pepsi, do you think you can give like a high level to folks listening on how we actually identify people who are, who would be interested in a term reduction?
Yeah, so while this is imperfect, and all data models are imperfect, because it's all correlated data, we can look at the rate that someone may have gotten at the time they took out their loan. And we've built some pretty advanced modeling on that. So it's not just the average interest rate, but let's just say we were going to do something as simple as the average interest rate at the time. Um, you could look at someone's average interest rate, and what your offer rate today would be, and determine that there's a large enough delta to create either savings through term reduction, meaning like I could save on a monthly basis, or the ability to keep the payment the same and lower the term at the same time. And so that's really the secret sauce is being able to identify people that can benefit from this, right? To send somebody, or to market to someone or have a conversation with someone who truly can't benefit from it. Um, it's a difficult conversation to have. Whereas if you can get better at identifying, and again, there's no perfection in data. So, we're not going to be 100 out of 100 people that can benefit from this. Um, but the vast majority of people that call in will be able to benefit from it. And the better part of that is the vast majority of people that call in regarding this are highly interested in doing it, which
Yeah.
is which is a lot different than some of the more exploratory stuff on the other side. Like cash out is kind of can be an exploration. Same with payment reduction, it can be an exploration. But generally, what we've seen is the people that are calling in to reduce the term on their loan are highly they have a high level of intent to do that if they're given that opportunity.
I'm going to share something real quick on my screen, Ken. These are, when I talk to you, we talk about this all the time. And these, obviously, this isn't a surprise for you. These are the five motivations driving refinance decisions. There's only five motivations, and they always fall under these buckets.
Yeah.
And term reduction is one of them. Would you say the average one of our customers or a prospect, anybody who's in this business, should be looking at their portfolio and saying, do I feel confident that my marketing investment portfolio, as we dub it, is spread across these five motivations in the proportion that we see in terms of the population. You can see them right there spelled out, 10.7 million for equity access, all the way across to equity conversion. Do you think term reduction needs to be getting, as this one says, about 20% of your spend? You think that's accurate?
Yeah, I do. I think this is a good representation of kind of the serviceable addressable market that lives out there today, right? And so if you look at this, you go, most people try to either play an equity access or payment reduction, right? So equity access we call it equity access, but it's getting cash, taking money out of the equity of your home to do whatever you want to do with it, right? Whether it's pay off debt, whether it's, you know, build a deck, go on a vacation, whatever. But if you look at term reduction, it's the second largest of those things. And I think that most of our clients should be playing in those first three primarily. I mean, risk reduction going from an arm to a fixed rate, to reduce your risk, or an arm to an arm, or at later dates when HELOCs start to fully amortize and get locked in, those would be things to reduce risk. And equity conversion, that's for uh, reverse mortgages, really converting your equity into a an annuity, or reducing or getting rid of your payment, converting it to that. And I wouldn't suggest that people that are in the forward space, and don't have a dedicated team to equity conversion do anything in that space. But certainly, at some point, all four of those things should be represented. But in today's market, I'd say if you're not focused on those three, equity access, term reduction, and some payment reduction, and doing it kind of commensurate with the size of the potential audience, I think you're making a mistake.
Yeah. Yeah. Well, you've got a really awesome calculator that shows different options for the borrower. You don't have to pull it up right now, but I would say to anybody who's on the call, I've not seen a more clear decision for the borrower to make between term and payment, right? Those two options essentially, and cash out too, for the borrower than what Ken's built. I mean, Ken's been in this business a really long time. So if you're listening to this and you're thinking about how should my girls, loan officers be talking to borrowers? How should they be presenting options? You know, Ken is very willing to help out and show you show you what he's got. We're working on products internally to help you do that. And so if you're interested in running a term reduction campaign with us or about how your team should be presenting those options to borrowers, you can reach out to Richard at monsterlg.com and we can talk and I'll get a meeting set up with yourself, myself, and Ken, and we can give you an overview of term reduction and how to be communicating with borrowers. That sound fair, Ken? You feel you're up for that?
Yeah, absolutely. And I will say this, I think if you're not looking at three options when you talk to someone, um, you're not you're not doing yourself or the consumer justice. I mean, let's say you have an opportunity to lower someone's interest rate, right? And that's payment reduction. I can reduce your payment by $150 a month. Okay. Like I said, anybody's been in the mortgage business for any period of time who have talked to a consumer has come up against where they have a deal like that to present to someone and the person says, yeah, that doesn't do it for me. It's not enough. Right. However, what usually doesn't happen is we don't flip flop and give them another scenario with which to think about. So what usually happens in that case is the sales guy says, well, do you have any debt? Do you need any cash out? Right. Well, I've already determined I don't want to do this deal, right? So no, I don't really have any of that stuff. And that's usually what ends up happening. You hear this, but the truth of the matter is people have debt or they have needs. They wouldn't turn down cash. If you offered them $25,000 in free cash, I guarantee you 100 out of 100 of those people would take that money. But my point to you is this, like if you're not looking at it to say, okay, look, here's what you can save through on a monthly basis by lowering your interest rate and here's the amount of money you can save. And if you're not saying it at the same time, well, or you could uh, cut 3 years off of your term and keep your payment the same, right? Because that's ostensibly you could do those two things. And then lastly, the other thing is maybe you can get $17,000 in cash and keep your payment the same. Now you've given them solutions and agency over their choices, right? All coming out of the same concept, right? That all comes out of the same concept. Lowering my interest rate allows me to do these things, right? Where I think we get too pigeonholed, and I especially think younger loan officers or newer loan officers tend to become like very product specific. Like here's the product du jour. Here's what we're going to sell. It's a rate, they call it a rate and term refi, but we're going to lower your interest rate and save you money on a monthly basis. That's product du jour, where really what we should look at is forget about the product at first and let's talk to the consumer, figure out what the problem is. What is their high point? What do they want to solve? And then let's solve it for them, right? Or at least give them options, even if they don't know what their problem is or what they really want. By giving them those options, you may uncover it. And you're certainly more likely to uncover that problem, want, or need by giving them those options than if you just said, well, if you don't want to do that, do you need any cash? Do you want to do this? Right? Like give them the scenario.
Yeah, that's being a true financial advisor. And the more you can be like that, I think the more you'll also get referral business. Um,
100%.
but Ken, do you have any other messages that you want to share with the audience as send off going out?
Uh, I mean, other than look, the business always does this, right? And there's times it's harder and times it's easier. Um, there's going to come a time when things get easier, right? Don't lose the lessons you got while the times are harder, because what tends to happen is we tend to fall back into these old patterns, where it's like we don't give these choices to the consumers. That's why 2021, if you think about it, so few people did term reduction. Should have been a lot more term reduction, right?
Yeah.
And frankly, there could have been a lot of deals that were missed. We've seen people put in deals only to turn around 6 months later and take cash out of their property when they could have had a lower interest rate and taken that cash 6 months before.
Hmm.
All I say is like marketing, um, whatever the marketing message is or whatever the marketing medium is, that's all it is, right? It's designed to get a response, right? That dictates response. Ultimately, each person is individual. That person's individual situation should dictate the product, not the other way around.
Yeah, I love it.
So the last thing I'll say on that.
Well, everybody, thanks so much for attending and reach out to us if you want to learn more about running a term reduction campaign. You can talk to your CS manager if you're not a customer yet, or even if you're a customer, you can reach out to me, Richard, at monsterlg.com, and I'll get you in touch. We'll get you taken care of. So thanks so much. I hope this got you guys interested in term reduction campaigns. Ken, thanks so much. We'll be doing a lot more of these, everybody. So this is first of many to come.
Of course. Looks like there's a question, Rich.
Oh, we do have a question. Look at this.
Oh,
Oh, that's more of a, I'm
more of a
glad you
statement.
love the content. Thank you.
All right. Take care, guys.
Thanks, guys. Bye.